Hopefully everyone is doing well. Today's target is to solve question number 9.19. And the chapter which we are associated with is cost of capital, and we have already done 18 questions. So initial introduction or basic information has already been delivered. We are needed to just review that information in a quick way. So here we have our workplace. Cost of capital we are trying to understand. So for that purpose, just reviewing what is capital. The amount which is invested by owners of the business is called capital. Owners means proprietors, partners, shareholders. When they are putting amount into the business as an investment, that amount is called capital. It may be possible they are not using their own resources, they have taken loan, and amount of loan has been invested into the business. In that sense, it would be called debt financing. And in case if they are arranging amount within their own sources, they are using their own amount and investing the same amount into the business, it is called equity financing. And in equity financing we have three different ways. If amount is being taken from the ordinary public, the amount of that investment would be considered as common stock. If amount is being taken from specified investors, that would be considered as preferred stock. And there is a third option, this is called retained earning. And we have taken information and basic concept of all these investment. Retained earning, just for the sense of clarity, I'm just reviewing it. Common stock means when you have put very ordinary terms and condition. Anybody who wants to invest in your organization, you have termed for their investment as profit loss sharing. That means if organization will earn profit, part of that profit will be shared by common shareholders, and if there is loss, they will also be sharing this loss as well. In case of preferred shareholders, you will be fixing your terms and condition with a little twist. It may be possible profit will be shared with the preferred shareholders, but maybe loss is not being shared with the preferred. I'm just giving you an example. There might be any other term and condition, because these shareholders would having a smaller or better edge than that of common shareholders. Maybe they are celebrities, you are just willing to use their name, so terms and condition would be different to common shareholders, and those terms would be suitable and better and more fruitful than that of common shares. Retained earning means if organization had earned profit, that profit is retained and not distributed among shareholder. It is still in your hand, it is still retained by the company. And in case if company needs any further financial resources, so instead of issuing new shares, organization will have right to use this amount which is present in retained earning. So again, when amount will be used to invest in the business again, it would be considered as your capital financing. So these are four types of financing. Let's see what is in our question. You can see over here everything is written in the same way. You can take debt as we have described, not own sources of proprietors, partners or shareholder, rather they have taken loan, and then they have taken loan from common public, and now they are using retained earning as well. So these are three sort of capitals which we will discuss over here. One important thing is 40% of tax bracket which would be applied directly to the debt. All right, so let's start. We have to calculate weighted average cost of capital. For that purpose, you will need two main things: cost of each capital, and you will be needed to multiply it with weights. Now for the time being, we will be calculating costs of these capitals. So very first thing is cost of debt financing, and hopefully you have complete idea how to calculate cost of debt, for which a formula was introduced. You must have in your mind what is the formula for calculation of cost of debt. All right, I have arranged few rows for the formula. Very first thing is the interest amount which would be involved in calculation of debt. Then you will be adding double bracket and face value of that bond which is issued in return of that loan which you are taking. You will be subtracting sale value, market value, and then bracket close. You will be needed to divide with number of years. It is nominator, and in denominator you will be with bracket face value plus sale value or market value, bracket close, and divided by 2. 2 is fixed over here. So here you have the formula for the calculation of cost of debt, and now we will see what is present in our question. So we'll have to look at it. We are reading over here. The firm can raise debt of 1000 par value. So what first thing we have got is par value, that means face value is given, and we may write in this way: face is $1000. Whatever is given in the question, we are going to note it down. Then you have 8% coupon interest rate, and since you know that in our formula the starting word is interest, for interest what you will do, interest would be calculated on face value, and the percentage which is given in the question, you will multiply that percentage with the face value, and face value is already we have written is 1000, and coupon interest rate you have seen is 8%. So you are just needed to calculate 8% of 1000. Here you have 1000 and you will write 8 divided by 100. This is mathematical statement, and now you would be writing its calculated answer: 1000 multiplied by 8 divided by 100. So we have got interest. This is your first calculated form of interest. Now you can see in your formula you were in need of interest. We have calculated. You are in need of face value. We have already written face value. Now let's see what is next for us. The cost of issuing and selling preferred stock is expected to be 5 per share. First cost has been arrived, and there is no, we were actually on debt. So next is to sell. अब जो आपको you were in need to have sale price. To sell, issue an average discount of 30 per bond. ये पहली कॉस्ट आपको मिल गई 30, and have to be given. The firm also may have flotation cost of 30. So discount 30, flotation cost 30. These are two costs. And why these two costs are given? Because we are in need of having sale price. तो सेल प्राइस कैलकुलेट करने के लिए या मार्केट प्राइस कैलकुलेट करने के लिए what you will have to do, you will in need of gross sale, will subtract any sort of costs which are given in the question. For this purpose, gross sale is not given, so we will suppose initial price is 1000, then you have $30 of discount and $30 of flotation cost. This is how you can calculate the sale price. Above was the mathematical statement, and now you will calculate it. On calculator you will write 1000 minus 30, which is flotation cost, minus 30 again, which is discount, and here you have got your sale price. In this way, hopefully everything is calculated except number of years. Okay, let's see. This debt is taken for 20-year bond. So we have got our number of year, which is n, and n is equal to 20. Every input has been completed. All right, so we are now free to put these amounts. Amount of interest we have calculated is 80. So you will put 80 over here, and then you will add with double bracket, face value is 1000 and sale price you have calculated over here is 940. So you will be subtracting 940 from here, bracket closed, and then divided by number of years, and you have seen your number of years means n is 20. Put 20 over here. Nominator is completed. Now what is in the denominator? With a bracket, face value is 1000. Please focus upon the formula. This is your formula and we are writing over here. You see what is written over here? It's not sake, it is sale price. So face price 1000, you will be adding sale price which you have calculated is 940, bracket close, and now divided by 2 which is fixed. Here you have your formula and now you will use your calculators and will get the answer. So within your calculator, first numerator denominator sign, and interest was 80, I think. Okay, 80 was your interest. Then you will add again numerator denominator, and face value was 1000 and you were needed to subtract sale price which was 940, number of years 20. Again you will be doing the same thing on denominator, where face value was 1000 plus 940 was the sale price and 2 is fixed over here. So we have got initial value before tax, the value has arrived. All right, it is 0.0855. So answer of this statement is 0.0855. You may write it 0.856. Hanji, because 855 and then 67, so it may be written as 855. So this is your cost of debt in terms of times. But obviously this is cost of debt before tax, and you are required to calculate cost of debt after tax. And for that purpose, what you will have to do, you will be writing cost of debt before tax and will be multiplying with difference of 1 minus tax rate. Here you will be able to calculate your cost of debt after tax. और आपने याद रखना है कि हमेशा कॉस्ट ऑफ डेट जो है वो आफ्टर टैक्स ही फार्मूला के अंदर रिक्वायर्ड होगी. अब आप इन वैल्यूज़ को पुट कर सकते हैं. आपको क्या चीज़ चाहिए कॉस्ट ऑफ डेट आफ्टर टैक्स कैलकुलेट करने के लिए? कॉस्ट ऑफ डेट बिफोर टैक्स. हेयर वी हैव कैलकुलेटेड कॉस्ट ऑफ डेट बिफोर टैक्स. अमाउंट इज़ 0.0856 भी लिख से चलें, जो आ रहा है वो लिख दें. एक्चुअली अमाउंट वाज इन डेसिमल फॉर्मेट, सो यू वर इन नीड टू पुट ऑल द डेसिमल्स. 8556 and secondly you see the formula. What we will do, cost of debt before tax यहाँ तक, and next is to multiply with what? Bracket open and 1 minus tax rate. So here you can see over here we have already seen the tax bracket, and that tax bracket is 40%. 40% mean 40 divided by 100, which means 0.4. Here you will be calculating your cost of debt after tax. और ये mathematical format we have completed, and you will apply now calculator. 0.0856 bracket open and 1 minus 40% mean 40 divided by 100 means 0.4. So with this you can calculate it. Achha, sign we have not applied multiplication. So here you have your answer which is in terms of times. अब आपने अगर इसको चेंज करके डेसिमल फॉर्मेट के अंदर लेना है तो यू कैन, and for that purpose it's very easy. You may have now in your mind answer in terms of times multiply. You will multiply it with 100 and you have got answer in terms of percentage as well. So cost of debt has been calculated. This was your requirement. Mark it as it has been done. And what you have calculated? Cost of debt. All right, guys, we are going to solve cost of debt, cost of retained earning, cost of common stock. First step has been completed. Cost of debt is being calculated. Now let's see what is next for us. As you know, under cost of capital, we will be calculating cost of common stock and then cost of preferred stock and then cost of retained earning. These are our steps. In question, next is given preferred stock, so you will be calculating preferred stock. For preferred stock, first we are going to write our formula. For cost of preferred stock, you need dividend and then it would be divided by net sales, and that's all. For preferred stock, dividend or dividend in terms of dollar, dividend divided by net sales. Come to your question. For preferred stock, firm can sell 8% preferred stock. This 8% is actually the amount of dividend, but here only percentage is given, so you will be in need to calculate 8% on face value. And here 8% 95 per share, this is face value. The cost of issuing and selling preferred stock is expected to be 5. So we will discuss it later. For the time being, we will be calculating our dividend. For dividend, we do have two major aspects: 8% preferred dividend, 8% preferred stock at its 95. 95 here is the face value and percentage is given 8 for the dividend. And as we have described, that percentage will always be calculated on face value. Face value here is 95. The first thing first, you will be calculating dividend, and dividend if is given in percentage, you will take face value and will multiply the percentage given in the question. Face value here was 95 and you will be multiplying by its percentage, which was 8. So on calculator, what you will do, you will calculate 8% of 95. For that, 95 multiplied by 8 divided by 100. This way you will be able to calculate your dividend. If amount of dividend is calculated, now we'll be focusing upon sale value and net sales. We need net sale can be calculated with gross sale price, and you will subtract any sort of cost present or associated with it. And we have already seen some of the costs. Gross sale is not given in the question, so we will use the face value. Here you can see we are focusing upon this preferred stock, and in this figure only 95 is present. You can see over here no sale price is given specifically for the preferred stock, so we will use 95, which was actually the face price, so we can consider it as gross sales. Cost is 95, with which you can calculate your net sales. 95 is to be considered as gross sales. You will subtract cost, which is 5. Here is mathematical statement. Now calculate it. 95 minus 5, 90. 90 was your requirement, and what you have calculated? What you have calculated right now is net sales. All of our requirement to calculate cost of preferred stock is completed. You were in need of dividend. Dividend has been calculated 7.6, and you were in need to divide by net sales. Net sales has also been calculated. Put these amounts over here. Dividend is 7.6 and divide it with net sales, which is 90. This is mathematical statement. Now calculate it on calculator. 7.6 divided by 90. This was your preferred stock, and here you have got its price in terms of times. So you are in need to change it in decimal as well. For decimal, it's easy. Just take the answer and multiply it with 100. Here you have got your answer for cost of preferred stock. So second statement has been completed. You were calculating cost of preferred stock. Answer has been arrived as 8.4, which is in terms of percentage. And we have also calculated. Please excuse for that disturbance. Okay, so there were two costs which we have already calculated. Cost of debt, and answer is 5.13. After tax it is, and cost of preferred stock, answer is 8.4%. Both answers we have calculated are in terms of percentage, and in terms of times we have also calculated. As you know, whenever you are in need to calculate WAC, weighted average cost of capital, for that purpose you need amount in terms of times. तो हमने दोनों ही calculate कर ली हैं. Just to match the answer with the book, we have calculated in terms of percentage, and for calculation of WAC you have amount in terms of time as well. अब आपकी जब दो चीज़ें complete हुई हैं, next आप इसको check कीजिए. Next calculation is associated with retained earning, as you can see over here. One thing I should mention over here, when in any question common stock and retained earning and are given in the same question, and some values of retained earnings is missed, and you can use values given in the common stock. If common stock we are calculating and some of the amounts are or values are missing in common stock, you can use it for the retained earning. Normally there will always be a tough competition between common stock and retained earning in practical. So whenever you have a choice to issue new common shares and you have retained earning, normally companies and organization would prefer to use amount present in retained earning instead of issuing new common stock. So there is a stiff competition between these two. And since we are solving our problems and questions, what I would suggest, whenever you see common stock and retained earning in the question at the same time, if values are missing for the retained earning, you can use values present in the common stock section. But here common stock and retained earning are given separately, so you may calculate it separately as well. So some of the organization will be issuing common shares, and at the same time they might be using their retained earning as well. So it depends upon decision of any organization. Since we have retained earning separately, so we will calculate cost of retained earning. For that purpose we should have its formula. Preferred stock we have calculated, and now we are up to common stock and retained earnings. We are in need to calculate. So first we will see the common stock. Okay, for common stock we will write our formula first. Here we have the common stock, dividend in terms of dollars and amount, and you will divide it with net sales, and answer of this division when you will get, you will add growth rate, which normally is given in the question. And for 9.16 I think, or 9.17, you have already calculated growth rate as well in 9.17 I hope. So this is your formula, dividend divided by net sales plus growth rate. So you will be searching or looking for three items: dividend, net sales and growth rate for the common stock. Let's see what is given in the common stock. The firm, हम यहाँ से पढ़ रहे हैं, the firm's common stock is currently selling for 90 per shares. This is your current selling price, and it may be considered as your face price as well, because nothing else is given. So 90 is currently sale price of what? common shares. The firm expect to pay cash dividend 7. This is first thing we have received is 7. Normally percentage of dividend can also be given, but here direct amount is given, that is 7. So what we are doing, common stock, and in common stock dividend is 7. The firm's dividend has been growing rate of 6%. Okay, that's good. Growth rate has also been given, and hopefully you remember we have calculated growth rate by ourselves as well. Here calculated form of growth rate is given, so you are going to write 6% as growth rate over here. So 6%, and whatever is input is given in the book, we are just noting it down. Common stock, and then the stock must be underpriced. Here cost is mentioned, underpriced 7, and 5 per share is flotation cost. I think yes, it's flotation cost. So flotation cost is 5 and underpricing is 7. So these are two costs, and total price was 90, and you are in need to calculate net sales. Or how would we calculate net sales? For this you need gross sales, and you will subtract any sort of cost while issuing your uh, common stock. If there is any cost, you will subtract. Gross sale, as you know that he had mentioned, it is 90. Yes, here current selling is 90. This is your gross sales. So you will put 90 over here and will subtract any sort of cost, and we have seen there are two costs. Underpricing is 7, flotation cost is 5. So 7 and 5, these are two costs, both will be subtracted, 7 and 5. This is mathematical statement. Now apply your calculators over here. 90 minus 7 minus 5. So here is your net sales, and I am hopeful everything which is required in the formula we have calculated. Net sales 78, growth rate 6%, dividend 7. So this is what we need over here. थोड़ा सा अरेंज कर लें इसको ताकि ये उधर ना जाए. Okay, so dividend we have calculated is 7. All right, and then divided by net sale, which is 78. All right, bracket on, and next is to add growth rate. Growth rate here is 6%. 6% means 6 divided by 100, which means 0.06. All right, this is your mathematical statement, and now apply your calculators. So what we have, 7 divided by 78, bracket closed, add 0.06. So here we have got answer for common stock as well, 14.97. Common stock is also completed, and answer we have got is 14.97. But this answer is in terms of time, so you may change it in terms of percentage. And how you would do that? You will take this answer and will multiply with 100. Answer in terms of percentage has also been arrived, and both answers are important. This answer is in terms of percentage. This answer would be matched with the book answer, and this in terms of time, cost of common stock will be used to calculate WACC, weighted average cost of capital. All right, we have calculated cost of debt, cost of common stock, and cost of preferred stock. Now see in your question, answers are given over here. You can make a comparison, take a screenshot and compare these answers. Okay, after tax cost of debt we have completed, cost of preferred stock we have completed, cost of common stock we have completed, although cost of retained earning is also given in the question, but requirement has been ended. So you may calculate or you may not calculate, it depends upon what is in requirement number D. Calculate firm's weighted average cost of capital using capital structure weights shown in the following, and weights are also mentioning that retained earning is not present. Now here there is a question, if you will calculate retained earning, you can calculate WACC in two different ways. It's up to you. You may calculate or you may not calculate. It entirely depends upon you. Okay guys, when retained earning is given, so better is to calculate. I have given you an option, you may or you may not calculate, but if retained earning is given, you will calculate cost of retained earning and then you will calculate WACC with two different ways. Once you will one at first step you will use common stock for calculation of WACC, and then you will use retained earning in place of common stock and will calculate WACC as well. So there will be two answers of WACC, one when you are using common stock, second when you are using retained earning. So we are now be calculating retained earning as well. So cost of retained earning, how you would calculate, amount of dividend as usual you need, but you will divide it with gross sales, put bracket over here, and then you will got the answer of bracket, add growth rate over here, with which you will calculate cost of retained earning. So let's see what is present in retained earning. We are here for retained earning. When measuring this cost, the firm does not concern itself with the tax bracket. Okay, it expects to have available 1 lakh of retained earning in the common years. Once these retained earnings, all right, nothing is given, dividend amount is not given, sale price is not given, growth rate is not given. So how would we calculate cost of retained earning? As earlier it was mentioned that if you are in need to calculate retained earning and values are not present in retained earning part, so what you can do, you can use same amounts which are present in common stock section, but with the twist of changing the formula. As you know, there is a smaller change in formula for cost of retained earning and cost of common stock. In common stock you use net sales, but in cost of retained earning you use gross sale. This is the smallest difference, and since we have already seen that dividend is present in common stock and that dividend is 7, so we will use same dividend, $7, and then you are in need. So we have mentioned dividend over here, and now let's see what is sale price. So we are actually following common stock. In common stock we have our sale price which is 90, and since gross sales will be used, so gross sales would be 90 over here. And now we are looking for the growth rate, and here you can see growing annual rate of 6%. So last thing which we needed was growth rate, and it is given as 6% growth rate. Okay, so we are free to put these things in our formula. Formula was dividend, and dividend is 7, then divided by gross sale which is 90. Next you will put brackets over here, answer of bracket you will get, and will add growth rate 6%. 6% means 6 divided by 100, which means 0.06. Mathematical statement of cost of retained earning is ready. You are now calculating it. Bracket on 6 divided by 90 and add 0.06. So here you have calculated, it was 7, typographical mistake, 7 over 90 plus 0.06. All right, so we have got answer of cost of retained earning in terms of times. Now you may need to convert it into percentage. For that purpose, answer of cost of retained earning multiply by 100. So here you have calculated cost of retained earning in terms of percentage as well. This is your answer. Mark it as it has been done. And what we have calculated, this is cost of retained earning. All right, so finally all four costs we have calculated. This was your cost of debt, answer was 5.1, cost of common stock, and answer was 14, cost of preferred stock, answer is 8.4, cost of retained earning, answer is 13.7. Now we are free to calculate WACC. Next process is for the WACC. Let's start it. In our question, there were four types of capitals given to us: debt finance capital through debt financing, then preferred, common, and retained earning. Values of cost of all of these capital has already been calculated, and we are now up to calculate WACC. For WACC, what you will have to, we will calculate WACC in two ways today, since we are having retained earning in a separate way. So weighted average cost of capital, which is actually WACC, but this WACC would be calculated according to, there are two items, according to common stock, and then we will calculate same cost of weighted average cost of capital according to retained earning. So up to now we will be calculating weighted average cost of capital according to common stock. For that you should have capital structure at first step, then you need amount of these capitals, then you must have weights, cost which we have calculated on upper part, and then you are just going to multiply weights and cost. That means last two columns would be multiplied with each other. So here is our formation for the calculation of cost of weighted average cost of capital. और सबसे पहले तो कैपिटल स्ट्रक्चर आपने पता करना है, और वो आपको डेट फाइनेंसिंग की सूरत में दिया हुआ है, द फर्स्ट थिंग. फिर आपको कॉमन स्टॉक की सूरत में दिया हुआ है, देन आपको प्रेफर्ड स्टॉक की सूरत में दिया हुआ है. अच्छा, अब आप पहले ये काम करेंगे कि डेट, कॉमन और प्रेफर्ड, इन तीन चीज़ों को यूज़ करेंगे. क्वेश्चन की तरफ वापस आइए. क्वेश्चन में वी हैव डेट, preferred and common. Initially you will use it at first step, or then debt, preferred, instead of common stock you will jump to the retained earnings. So these are two ways with which you will calculate WACC, or weighted average cost of capital. So what we have written right now is debt, preferred stock and common stock. अच्छा, अब इसके जो weights हैं they are given in the question in lower portion. If weights we can see are given, okay, let me see. Okay, I have got, these are weights given in the lower portion. So here methodology is same: deferred, preferred and common, and 30, 20 and 50, these are weights. So long term debt has 30% weight, so you will write here 30%, and as it was earlier mentioned, we are going to put all factors over here in terms of times. So 30% means 30 divided by 100, so 0.3 weight of debt, and then you have weight of preferred stock, which is 20. So let's go to the preferred stock. and write down 20%, but we are needed to convert it into times. So 20 divided by 100. This way you have written amount of, yeah, actually these are not the amounts, these are the weights. Heading was little different, so we are removing from here and writing over here, these were the weights. Okay, amounts as usual in question, it's not given. You can have this question and no amount is mentioned over here. Right from the beginning to the end, you can see here nothing is mentioned about the total amount of debt, total amount of preferred stock, total amount of common and retained earning is not given. So it's not the big matter. If amounts are not given, you may write just 0 over here, and for all 4 items you may write 0 as usual. Amount is not in previous question, amount was also not been given. Now we are up to common stock, and let's see what is weight of common stock. Here it has been mentioned in the last line. You have common stock here and weight is 50%. Okay, 50% in front of common stock, but you will convert it into times. So 50 divided by 100. Weights are completed. Now next is cost, and you have already calculated cost at above section. What we have done, we have taken common stock, there its cost, then cost of debt, its cost. These costs will be written in terms of time over here. So very first thing, it go to the debt financing. This is first part. Yeah, debt financing है, and your cost is written in terms of times over here. So you are needed to put cost of debt in terms of time. Wait, I should have written here in terms of time, so that there must not be any confusion. Come to the point, we are needed to write cost of debt in terms of time. Very first part was cost of debt, here you can see, and two answer. This answer is in terms of time, this answer is in terms of percentage. So we are in need to have answer or cost of debt in terms of times, put it over here. Okay, now second we will go to the common stock, and here you have common stock. There are two answer. One answer is given in terms of percentage, second answer is given in terms of time. So you will put cost of common stock in terms of times. Completed. Now third item we do have is preferred stock. So go to the preferred stock. Here we have preferred stock. There are two answer. One answer is in percentage, one answer in terms of times. You are needed to put cost of preferred stock in terms of times. So what we were requiring, weights and cost, both have been completed. We are free to calculate our values for debt. Weight of debt is to be multiplied with cost. Weight of debt is 0.3. Multiply its cost, which is 0.05. Here we have first value of cost of debt. Average has been calculated for debt. Now you will calculate value for common stock. Its weight is 0.5. You will multiply it with cost, which is 0.14. So here is the value for common stock. Now next is for preferred stock. You are required to multiply weight of preferred stock, which is 0.2, with cost of preferred stock, which is 0.08. Here you have got the value, and now you are needed just to calculate its sum. That sum would be considered our answer on calculator. What you will do, 0.01 plus 0.07 plus 0.01. In this way you have calculated weighted average cost of capital in terms of common stock. And as usual, answer is in terms of times. You may write it in terms of percentage. For that purpose you will pick the answer, will multiply it by 100. So we have 10.71, which is what, weighted average cost of capital we were looking at, but this answer is associated with common stock only. Okay, now you will repeat whole of this procedure. as it was mentioned earlier. This procedure will be repeated, and I have a little ease. What I will do, I will just paste same things again. The only thing you will change, instead of common stock, here you have common stock, you will write over here retained earnings. So for retained earning, we will be changing its weight and its cost. Since retained earning is not being mentioned over here, so what you will be going to do, you will write exactly the same weight which is used for common stock. That weight would be repeated for retained earning as well. We are calculating weighted average cost of capital, but not according to common stock, according to retained earning value. Okay, so here we have weights already completed. Now you are needed to change cost of retained earning. Here we have calculated cost of retained earning. We will go over here. This is your retained earning. There are two answers. One answer is given in terms of percentage, second answer is given in terms of time. So you will put in terms of time. And cost of debt was deleted, don't know how. So you will put cost of debt again. Go to the upper part. First section was cost of debt. Here we have cost of debt, and there are two answers. One is in terms of time, second is in terms of percentage. You are needed to put in terms of time. So in this way both columns are completed. Weights we have written, cost we have written. All right, and we are just needed to convert it. This was preferred stock, and we are needed to convert in terms of times. It is your preferred stock. We are going up, and here we have got the preferred stock. We were having two answer. One answer was in terms of percentage, as you can see, and one answer was in terms of times. So put answer in terms of times. Cost is completed, weights are completed. All right, and then we have already put a formula over here with which total has automatically been calculated. The only thing we have changed is what? We have replaced retained earning with common stock. So common stock was replaced by retained earning, and what we have done, weight is same as of common stock, but cost of retained earning we have calculated earlier. Here we have calculated retained earning, so we have used answer or of cost of retained earning in column of cost. This is the only change we have made. Please keep in your mind where the blue square is showing the only amount which we have changed for the calculation of weighted average cost of capital according to retained earning. Remaining all amounts are same. Every weight is same, every cost is same, but we have changed only cost of retained earning. So with this, what we have calculated, weighted average cost of capital according to, one second please, according to retained earnings. So now you can see we have weighted average cost of capital according to common stock, weighted average cost of capital according to retained earning, and we have two different answer, 10.71 and 10.11. This answer is in terms of percentage, and we have answer in terms of percentage. In whole of the question, what we have done, we have calculated cost of debt at first step. This was his answer, its answer. Then we have calculated cost of common stock, its answer, cost of preferred stock, answer, cost of retained earning, answer, and then we have calculated weighted average cost of capital using common stock, and we were not using retained earning. We have put weights and cost were calculated on above side, first part of the question, and here you have the answer of weighted average cost of capital according to common stock. And then what we have done, we have replaced common stock by retained earning. Weights were used similarly. You can see weight 352 and weights 352 over here. Weights were same, and only thing you have changed is cost of common stock. Now you can see cost of debt is same, Cost of preferred stock 0.08, cost of preferred stock same. The only thing you have changed is 0.14 and 0.13. That means for calculation of WAC according to common stock, you have used the cost of common stock, and when you have calculated WAC according to retained earning, you have used cost of retained earning. There you have to answer 10.71, 10.11. This way we have completed our question. For cost calculated to WACs calculated, two wax. Okay, and now we have 9.19 absolutely completed. You can compare these answers with the book answer, and we'll surely be meeting again for the solution of any other question. For this particular question, if you have any query, you can message, text, or you can directly meet. I'm requesting you to please spend your time for understanding of these questions. When we are meeting again for the solution of any other question, I am hopeful you will be praying for me as well, and you will be taking care for yourself as well. Up till then, please take care. Thank you very much for your time. Allah Hafiz.